morning, guys. How are you guys doing? I hope you are doing fine. So, if it's your first time being here, I want you to today I love to try something very important. It's something that I don't feel like teaching public, like YouTube. Something that I thought to do. I'm teaching on my private channel, but I feel like so you need to know so that you can use that to understand your chat and how you get to being able to predict where price used to be. Nasdaq play out. Also, currently you can see how the euro dollar is playing out. Now, this is something that I refer to as the algorithm of control, and in brackets we refer it as the retail versus the institutions, or the retail traders versus the institutional traders. We should head from those that invest with huge capital and they don't like to invest, like they make more profit than their losses, stuff like that. And that is something I'm going to break down for you guys so you guys can easily understand everything about how it works, and giving you the financial literacy and education that you need to be able to know the right time you could possibly invest in a particular stock market, buy a crypto asset, and be able to analyze the market perfectly. Though nobody's perfect, but being able to analyze the market. The algorithm of control is a technical and data analysis done to define where the algorithm is to deliver price to, and which is used to define the collections and distributions of orders, enabling opportunity for smart money to get into the market, differentiating the retail traders from the institutions. Now, one thing you should know is that what move price in the market, what the candlestick movement and everything done in the market that you see on the market is being done by the algorithm. The algorithm delivers the price. The algorithm does everything in the market. Now, what is an algorithm and what does it do? Now, an algorithm, those that are into computer science, I think you might have been taught this in school. So an algorithm is a set of instructions given to solve a particular problem. Now, in the case of forex trading, it solves the problem of what? Executing orders for us. All right? It solves the problem of activating pending orders and executing orders, and also it engineers liquidity in the market. Now, if you could recall back to the origin of forex trading, to the origin of trading, when technology and AI has not been introduced, you know that forex trading started by people trading on the counter, known as OTC, right? And also you do phone calls, you tell your brokers to execute an orders for you, this and that, you tell the banks and stuff like that. Now, that's brought too much problem because not everybody orders is being executed, or the price at which you tell your broker to do it for you, it's not been executed at that particular price, or maybe at that day or stuff like that, because there are too many people on the line, all right, on the counter. Now, as technology is advancing, that means we have to solve the problem of that, all right. So that is how the algorithm is now introduced. The algorithm now solves the problem in a way in which we can execute our orders with our phone from home using our data technology, right? So you can stay at home and do your trading stuff electronically. So what does the algorithm does? The algorithm collects all of those data, right? All of the orders that have been placing with our broker MT4, MT5 platform. It's it takes those orders, and it is solving the problem of what? Taking orders from everybody. So everybody is now able to take trades without delay or anything like that. Alright, so the algorithm is now there to solve the problem of what? Executing and taking our orders. Alright, now where is algorithm analysis done? The algorithm analysis for the delivery of price and prediction is done on a range. Alright, it's done between a range high and a range low. That is why I always say it is very, very important that you start off your analysis from your higher time frame, for your monthly time frame down to your weekly time frame down to your daily time frame, and then the lower time frame could be used as something you can use to have your what? Confirmation entries. The higher time frame is to give you a hand of where the price wants to go to. It gives you a direction. It gives you a directional bias of where you know you want to go to. Is it a bullish directional bias or a bearish directional bias? Alright, after you notice all of that on your higher time frame, you can now be able to go down to your lower time frame and look for your entries and for your setups. Now the algorithm is done in a range of markets, in a range, and you get to identify that on your monthly time frame. That is why I talked about the algorithm new range being done on the monthly time frame, done on the previous month's highs and lows. Now also it can also be used on your weekly time frame. Alright, you're using it on the ranging weekly candles, and you're marking out your previous week highs and lows, and with that you're being able to tell where the price is to go to. So that is why we don't have to trade on Monday, because Monday will give us a directional bias for the week. So you wait for Monday to be done, and when you see your confirmation entry, which is a short-term break on Monday, then Tuesday, Wednesday, Thursday gives you a directional bias. So it can be used to tell if Monday will be the high of the week or the low of the week. And then Thursday to Friday could be the high of the week or the low of the week also. So these are the things you have to be taking note of. Alright, now another thing that you need to take note of in your chart is you understanding what the stop loss is all about. So that is, I'm not getting in depth, I'm getting deep to explain what this algorithm does. Now if you can be able to understand what stop loss is all about, then you can be able to tell how the algorithm delivers price and what this algorithm of control is all about. Alright, so let's just say that you're having an area of support and resistance. Alright, now if you are buying at this price level right here, alright, so you're like, this is support level, price tested in multiple times, that means it has to buy, right? So you're buying at this particular price level, you have a particular unit that you're buying, particular lot size that you're buying. In case of investment, you have the number of stocks that you invest in and the quantity that you have, the quantity that you're purchasing. So if you're buying right here, right, so if price goes below the price level at which you bought it, it means that you want to sell off and you're selling off in loss, right? So that means that this your stop loss right here is now why the broker is there for you. The broker is now solving the problem for you. So the broker helps you sell off that your quantity, all right? And in this case, you're selling it in loss because you are selling it below the price level at which you bought it. So that is what stop loss is all about. Now, when price gets to area of resistance, and let's just say that you're trading the euro dollar, right? So if you click a sell, it means that you're selling the euro and you're buying the dollar, right? But and your stop loss is placed above here, so it's trying to tell that if price comes back higher, it means that you want to buy the euro back and sell off the dollar. But what happens? It is selling off, right? So later on it starts to buy, so it's now having value. That euro is now having value more than the dollar. So you're like, oh gosh, let me buy it back. But then what happens is that you're not buying it back at an expensive price. So that means the quantity, like the quantity you have right here, is the quantity that you used to buy it back. But then you're buying it back at an expensive price level. So that means the value at which it is worth right here will not be the same right here. So that means you're having a loss because you're buying it at an expensive price. right? So that explains the stop loss. Now, if stop losses are resting below right here, right? So that means that the stop losses are pending sell orders, right? They are pending sell orders. So what do you think the algorithm will have to do? What do you think the algorithm will have to do? Now, what the algorithm will have to do is that, first of all, it executed the buy orders, like we, the retail traders, are buying from this area of support, right? Now, where is it drawn to? Why is it buying into? I want you to go to your chart and then do this analysis. You will get to notice that the buying that is doing right here is it's going to be to an area where we're having sell side imbalance, all right? Where we're having sell side imbalance. So when it gets into that sell side imbalance, remember, sell side has to be balanced with the buy orders, right? So it balanced the sell side, and then that is where you get to see an execution of sales, right? So it's trying to say that, let's just say that institutions place the sell right here to balance the sell side inefficiency or a favorable gap. So it trades lower. Where is it trending to? That is the buy. That is the sell that is executed right here, right? And on the other side, now since the institutions are trading with huge amounts of capital, right? And remember, I talked about that if there is a seller, right, in the market, then that means there's a buyer. If you want to buy, that means there should be a seller, right? Now, since they are pending sell orders right here, so that means there's pool of liquidity. We are referring to area of support and resistance, to an area of liquidity pool. So that means there is pool of sell orders right here, billions and trillions of sell orders resting right here. So that means there are enough people who are willing to sell at this area. So what do you think that the algorithm will have to do? The algorithm will have to go and execute those orders. It has to go and take those orders. Now now the institutions on the other side, understanding that they are looking for who? Sellers that they could buy from, all right? And that means that they are now buying it at a cheaper price. So the algorithm trades lower, right? So it now activates the pending buy sell orders right here. So what is it trying to do? That means the algorithm is solving the problem of what? Taking these pending orders. All right. Now the institution on the other side, seeing their price is now cheaper, people selling their assets at a cheaper price level, the institution will like to buy it. All right, they will like to buy. So that is why you get to see a hunt at those areas, or liquidity grab, whatever you choose to call it. Now, after that hunt, that is when you get to see the price rally higher, impulsively. So now, where is it going to be drawn to? So the algorithm has taken orders right here. It has solved the problem of what? Pending sell orders right here. So where do you think it has to be drawn to? It has to be drawn to the opposite side, where we are having pending orders that needs to be taken, which is where? An area of resistance. So it trades higher to where? The area of resistance. Now on the other side, understanding the concept of buying and selling, and so that means if there's someone that bought these sell orders right here, that bought from those people that are trying to sell right here, what do you think they'll have to do? They are looking for who? Buyers that they could sell to. So that means when price, that is why sometimes you get to see when price gets to the area of resistance, all right, it starts to sell off. So that means that someone that bought right here is selling off their profit right here. They made money, all right, they made profit. So now the profit that they made, what do you think they have to do? They have to sell it to those who are willing to buy. And that is what? The stop loss is resting above the area of resistance. So they are selling to those who are trying to buy. Alright, so the price gets back to range again, and the ranging market continues. Unless it decides to find a directional buyers to trade higher. And if it has to continue trading higher, then that means there will be an order block right here. So if price hunts it and then starts to sell off to those who are willing to buy, if this order block is valid, then price will use that to continue going higher. So that is why with this you can get to understand what I mean when I get to use the algorithm to talk about hunt in previous month low, then that means its next draw is previous month high. What I'm trying to explain is that they have taken the orders right here, then that means they will have to go and deliver the orders to the other side. All right. So with this, you can use that to predict the market. You know where you're looking for areas where you're having liquidity pools, and that is what the algorithm is trying to look for. It's trying to take those orders to settle both sides of the market, to settle the buyers and to settle the sellers. It is solving that problem for us. It's a set of program. Now we have Microsoft right here, and you're paying attention to your higher time frame. I always talked about that. You can see that we're having an overall bullish market right here. Right now, if you pay attention right here, let me take this off. If you pay attention right here, you can actually see that we had an area of support right here, right? So price starts to buy that support. Where did it trade into? Possibly, if you go down to the weekly time frame, that will be very, very clean for us right here. So it bought higher. Where did it trade into? It traded into area where we have imbalance, a volume imbalance or a fair value gap, right? So the sell was executed right there. For what reasons? For what purpose? To be drawn to liquidity pools, to take those support orders right here, those that are trying to sell right here. Now, on the other side, it has a smart money. You're waiting to confirm. All right, you're waiting to confirm that, and the confirmation is a violation of supply or a bearish order block, and then a structural break. Now, where do we see that? We can see that we have an area of order block resting right here. Now, we have not gotten any confirmation yet after liquidity pool was taken out. We are looking for what? A structural shift. So price traded the area of supply, it traded lower, and what did it give us? It gave us a failed low, right? So we have a failed low. This low is protected, and it hunted this candle's low. It traded higher, and what did it do? It gave us a structural shift. We have a break of market structure and violation of the supply zone. So that means that supply is not valid. Now, what is responsible? What is responsible for that? We have these areas of demand. So price trades into it, and I always talk about that if a supply zone that was supposed to continue pushing the price lower is violated, then that means every other unmitigated areas is not valid. They will only be used for a little bit of mitigations, right? And for the sake of this being a range market, like we have support resistance, then its next drawn is the high of that range. Also, if you use your trend line, you can actually see this right here is an area of liquidity pool. So it depends on how you choose your trend line and stuff like that. So this trend line right here is referred to as liquidity pool. We have an area of pools resting above these highs. So it needs to be drawn to those highs. And the overall trend is a strong, strong bullish trend. So we now trade higher, boom, to that range high. So if you're watching this Microsoft stock and you're seeing this, you're having the opportunity to invest. Also, if you check the monthly time frame, so let me take all of this out. If you check the monthly time frame, you can see that right here we have the algorithm D range right here, right? So this candle's low took our previous month low, and each drawn was this high. The next month opened, it fell to go lower, each drawn was this high. This month opened, it hunted this low, each drawn would be this high, and then that was how it continued trading higher to where areas where we have in buy stops. The same analysis was used on Euro USD. This is Euro USD and this is FXCM. Now, if you pay attention to this market right here on the monthly time frame, you can actually see that we have a range market. And this range market, what do we have here? That means we have an area of support, which have area of sell side liquidity pool. We also have resistance right here, which is the range high of this range market, which indicates areas where we have in the buy side liquidity pool. So in possible future, the algorithm would want to go and deliver this price right here to sell off, because it is it has taken the orders, depending orders right here of those who are trying to sell. So people are not buying from those who are trying to sell. Where they want to deliver to, it could possibly get to this high in possible future. Now, if you run down to the weekly time frame, we had a structural shift right here. So you can see that while trading lower, it's been trading in where? In liquidity pool, right? A range market where we're having the buy side liquidity pool. Now, after support is taken, we are trading lower. Right now, we are waiting for the confirmation to show us a structural shift. Right now, we have the supply price traded into the supply level, right, and then it violated it. So the confirmation was seen on the daily time frame, right here, right. So after the liquidity, even right here on the daily time frame, we still have a range market. We have this area of support, right. So you can actually see when it gets to support, it burst, and where did it buy into? It burst into an area of supply for the purpose for the algorithm to sell off from that area of supply to be drawn to area where we have the sales or liquidity pool, right? So if you trace backwards to the supply zone, the supply failed to break structure, and we finally have this structural shift. So after the structural shift, where were we drawn to? For our demand zone, and then it burst. Now the buying is being drawn to where? All of these highs, all these pending buy orders, all these buy orders that were left behind, these stops that were held behind. The algorithm did that for the purpose of what? Engineering liquidity, to leave liquidity, to provide liquidity in the market. So it is now going to those highs. Remember, I said if the one that was supposed to continue the bearish market is violated, then every other unmitigated areas are no more valid. We are done with that, and currently the algorithm prints the same thing it printed on a long range. It printed another range right here, right? So we have this range market, and the analysis I gave you guys was that we have hunted an area of support. So where do you think it has to be drawn to? It has to be drawn to a buy stop, which is this high. So after it breaks the high, we will get to know if it wants to sell off a little and then continue going higher to be drawn to the high, because the long-term range highs and lows is this high and this low. We are now dealing inside this long-term range high and range low, and that was how I was able to predict Euro USD for you guys and able to predict the dollar index for you guys. Now you get to notice that all of this is done without me paying attention to fundamentals, because I understand that all of this is done with what? The algorithm. We hunted support, and I started lamenting since October that Euro, we have to go bullish. Alright, because it seems like we are now buying this area of these stops resting below right here, and the supply that was supposed to push the price lower failed, so we shifted, and every other supply zone are now liquidity, and you can see that we were having just little reactions from those areas of supply, and they will keep on getting violated until it gets to where it wants to go to, which is where? This high. Because all this while it is trading downwards, the algorithm is doing that to be drawn to where? A range low. Because you can actually see that we have taken a range high right here. Its next joint is a range low. Then it trades backwards to the range high. I hope that with this you can be able to understand how you are going to do your analysis on your chart and be able to be at least 80% correct. Be able to know what the algorithm has to do. You can actually see I'm doing this without even marking your highs and lows, stuff like that, without marking the structures, because I'm paying attention to if the candlesticks are ranging, if I'm in a ranging market, if I am bullish, if I am bearish. You can see the move right here. And then the last one, I don't need to go to the XY anymore because I've already predicted the XY. Another one, the Australian dollar. See how I predicted Australian dollar, and you see how we traded higher. With these, you can predict. With these, you can look for your entries. Now, first of all, paying attention to your monthly time frame. What kind of structure are you in? We traded lower right here, and we hunted this sell stop right here. Also, we hunted area of support right here, right? So we only get to find confirmations first before we can tell if the price wants to go higher after hunting area of support. Now we have area of resistance right here, so it tells us that in the future price could possibly come back to this high. Now you're paying attention to how the price is trading. Now you can see that all of this is a trend and is in a choppy market, but it's going in a bearish move, right? But it's a choppy market. Now if you are to mark your structures, if you want to mark your highs and lows, you have this high, and then you have this low, right? And then you have this lower high, and then price traded lower to give you a lower low. Now I paid attention to my candlesticks. I pay attention to what the current market. Now if you could notice, if you could pay attention, you can actually see what happened right here, and we have a range highs and lows. We have this previous month's high right here, and then we have this previous month low. Now if you pay attention, you can see how the previous month low was hunted, right? And then this current month opened, failed to go lower. Now we are paying attention to this previous month right here, and that is the month of October, right? So October traded lower. Now we can go down to the lower time frame, and we're looking for our entries. This right here, you can actually see right here is a range market. This is an area of support, right? So price trades from that support. It traded higher, gave us a high right here. It traded lower. This is now October 3rd. Now the market starts to range, right? And you will still have an area of support right here. Now you can pay attention to what it did right here. Also, it brought the area of support, trade into imbalance, hunted this high, came back, hunted this low, and what did it do? It traded higher to give us a structural break. And that is what the month of October. November opened and gave us the confirmation entry by breaking structure. Running down to the forward time frame right here. So this is the area of support at which price bought from, and where did it trade into? It traded into imbalance, right? Then finally came downwards to hunt this low. Now it traded higher, and what you trade into? QML, because I know most of you mark that as QML. It traded into the Quasimodo. It traded lower, and what did it trade into? It traded into an order block right here. But the confirmation I had right here was that it did a hunt. Alright, so it did a stop hunt plus what? A violation of supply. This right here is a bearish order block that was violated. So we are now having a change of character, and finally we have a break of market structure. Because I know most of you guys might be looking at this to sell off, but there is no structure right here. There is no bearish structure. There's no bearish shift right here. This is just a range market. So you got violated. You're not paying attention to that golden D range, which were higher, and remember this was the previous month's high. Price trade lower. What did it trade into? First of all, you can see this has a breaker block, all right. And the other hand, I saw a what's it called, a bullish order block, and what I marked was this last candle that did that hunt, and then I could take my entry, take profit at this high, or we just hold for the rest of this month till next month, because we still have these buy stops at these highs. So what did the algorithm do? It has taken orders, pending orders from this sell side, and as a smart person, as a smart trader, you're paying attention to it. You're buying from those people who are selling off, and you're buying it at a cheaper price. Alright? You bought right here at the cheaper price. And one thing you should know is that that sell candle that are responsible to take that liquidity for the institutions to buy, that is the order block. Alright? So whenever you have an order block, you're paying attention to, if you want to buy at an order block, then you're paying attention to if it breaks structure. Alright? So let us say that your order block breaks structure. It has to break structure, and you're paying attention to have liquidity pool above your bullish order block or area of demand. So you're having that understanding that you're buying retail stops. Alright, you're buying the retail stops. So the retail traders enters the market, put in their stop losses, and price will trade higher from there to induce them, and then come back to buy those pending orders. So if the order block is right here, it shows you that the institutions are below there and they want to buy those stops. The algorithm used that order block to buy the retail stops. Okay, so just like here, we have that support right here. So that is our liquidity, and also we still have it right here. This is smart money trap and inducements right here, and you can actually see it's still printed that support right here below the order block. Alright, so it now hunted by those stops and we trade higher. So that is it, guys. I hope that this helps you educationally, and I need you to go to your chart, do your analysis, and also watch my videos on how I predicted the euro, how I predicted DSY, and you can see the Nasdaq has already delivered to my long-term high I told you guys about, and also to that liquidity I mentioned to you guys. So I could buy this, swing my trade, position trade, and if I have to invest, I have to invest. And you can actually see I talked about me using this to have a confidence within the stock market, and you can now see BlackRock doing wonders for me. It's an opportunity for me to buy BlackRock, because what is it doing? What is it showing you? You have area of support. That means they are sellers right here, and you're buying from those who are selling, and you will take a profit right here, and then long-term profit, it is high because the overall market is what? Bullish. Algorithm of control. So see you guys later on. So be safe and take care of yourself. Bye.